What's up, everyone? I hope you've had a fantastic week, and I hope your week's starting off well. So, over at my Instagram page, which I'll put a link to in my description, I've gotten a lot of questions over the past couple weeks actually about doing some extra analysis. So that's what this is all about tonight. I want to just kind of put this out there and just show you how I personally break down charts from all the way from like the monthly chart all the way down to like the daily and 4-hour chart. So as a swing trader, those higher time frames are my bread and butter, and that's really how I base all my trades off of those higher time frame charts, those higher time frame levels. And usually, sometimes, if the setups are right, you can get very powerful moves and pretty quick moves off of those levels. And there's some interesting levels being filled essentially as we speak right now on the Aussie dollar. So I'm going to spend a decent amount of time just analyzing the chart, talking through the process of how I analyze stuff, how I choose specific levels, and how I more or less kind of create those zones of interest for me. So let's get into that. Disclaimer wise, I don't have a big disclaimer or anything. This is just for educational purposes, so obviously don't go losing your life savings trading. You shouldn't be trading like that anyway. But with that being said, let's get into it and we will go from there. So as of right now, I'm on an Aussie dollar monthly chart, and we're essentially filling some levels. Now I am on TradingView, which I love. TradingView charts. It's the free version, so there's always these little ad things popping up. I don't pay for it because I primarily use Thinkorswim, or my FX trade Oanda actually utilizes TradingView charts. But I've found when doing higher time frame analysis on Oanda, so Oanda is their trading platform is called FX Trade. And when you do some higher time frame analysis and you're switching from weekly charts down to like daily charts, sometimes those drawings disappear, which I freaking hate. So I'm just on TradingView. I'm not affiliated with them or anything. It was just the first charting system that I came across as a new trader several years ago. So it's always been near and dear to my heart. I love TradingView. They have a lot of awesome tools and stuff. So let me get into this chart system actually. So the first thing I do when I am analyzing a chart is I'm just looking at trying to get a better understanding of what the market is doing. And the best way to do that is to get really, the big, broad picture, from bird's eye view, whatever you want to call it, and just kind of go from there. So on the monthly chart, they're giving us here all the way back to the middle of 2002. Price data. So that's a lot of data to digest. So being on the monthly chart, it squishes all that price data up into monthly bars. So it's very concise and easy to kind of see overall what is the market doing. What are the probabilistic outcomes, or what's the probability of something happen versus something happening versus another thing. So again, first things first, what I like to do is just look at the trend. Is it trending? Are we ranging? And overall, this is classified by my definition as an uptrend. Overall, big picture, bird's eye picture on the monthly chart, you can see we have a low, we have a high, big steep retracement, pullback, and then pushes on to new highs. And right now we are down in this area here. By definition, if you define an uptrend as consistent higher highs and higher lows, this chart has to be defined as an uptrend. Excuse me. And you can see that clearly by our lows, our higher low, our higher high, and potentially a higher low. Now with that being said, guys, this is a monthly chart. So to say that this thing's going to go on to new highs is very far-fetched and very future forward looking, like several years. Keep in mind that from this high to this high is a, let's see, August 2011 down into essentially August 2015. So that's 4 years of price movement, up and down, ebb and flowing, eventually making this high and that low. Okay, guys? So to say it's going to go all the way up, break these highs, that's not happening anytime soon. So just keep that in mind. Obviously, this is just a bird's eye view. There's a lot of up and down movement between now and whatever this thing decides to do in the future. Okay, so that's the first thing I do. Identify the trend. In my definition, by my definition, this is technically an uptrend. Okay, that may not look like it as of right now if you're on the lower time frames, because it's just been melting off, but it's melting off right into some interesting levels, and you'll see all that confluence unfold over the next 15, 20, 30 minutes or so. So stick with me. This may be a little bit longer video. I did kind of upgrade my package, so I'm not confined to a 15-minute time limit, and you guys know I can get a little long-winded. So sit tight, get some popcorn, enjoy it, whatever, and we'll see what we can mark up on this chart. So okay, so first things first, I like to look for the trend, and then I kind of like to look for trend lines and whatnot. And using these price points here, it's kind of hard to lock them on exactly, being on the monthly chart. So we might actually drop down to the weekly chart and kind of look at this from a little bit more zoomed in picture. So right now we're essentially sitting on this trend line. Now it looks like it's like broken and closed below, but you have to remember that support and resistance, any type of support and resistance, very rarely is it going to be an exact price point, an exact horizontal line or exact linear line. Very rarely will you get that exact precise test. Okay, occasionally it happens. You know, if you connect these 2 points, that was pretty perfect right there, that last little touch there after our initiation point, establishment point. That third touch there was pretty perfect, and we're right back around there, okay, on this trend line. So keep in mind, I like to view trend lines more or less like a zone, just like linear or horizontal support and resistance. I am much more of an advocate for zoning your support and resistance instead of just using single linear lines, single horizontal lines. Because think of support and resistance as a trampoline. And when you're jumping on a trampoline, what's happening when you're hitting the mat? Are you stopping on a dime and bouncing right back up? No, that doesn't happen. In fact, you land on the mat and you keep going a little bit. And that's the same type of thing that I want you to try and picture with support and resistance, whether it be a trend line, a Fibonacci level, a support and resistance line, anything like that, a channel structure. Think of it as you jumping on a trampoline, landing on that mat, and it just kind of, you just kind of go up and down, up and down, up and down a little bit. Eventually, though, you will reach that support of the mat where everything's in equilibrium for that split second before you start bouncing back up. That's the same way that you get these support and resistance zones. So a good example of that zone is essentially just this whole general area here. I know this is a huge zone. We're on a weekly chart, but as a whole you can visibly see the resistance and support in and around this zone. Okay, you can see I mean, like I said, it's a large zone, but we are smack dab in the middle of that zone right now. Okay, you can tighten it up a little bit and just kind of encompass some more, precise level. So, I wouldn't be against kind of zoning it off like this. You can see you still have that obvious support and resistance within it. And right now we're kind of in the middle of that zone. So that's two things in our favor right now. We have a trend line that price is essentially testing, and a zone. Okay, that's good. Let's see if we can find and use a couple other inflection points of the market to create even more confluence for ourselves. Now, again, keep in mind and bear with me that this is very, let me slip on my little magnet tool here and use that so it locks on a little bit easier. So we're going to use these 2 points here, this point and this point. Now I want you to again pay attention to these wicks here. So, and you can see it even a little bit better on the monthly chart. Let's reset this chart and just kind of look at this here. Let me put these other ones on here as well. So I want you to pay attention to these lines here. Got two very obvious inflection points in the market that really stopped price from going higher, dead in its tracks, and reversed. Now this is a monthly chart, and these are very strong moves coming off these 2 points here. Same here, very strong up moves coming off. And then as we break it down in this area, you can see some of the wicks, But one thing I want you to pay attention to is all these wicks in and around here where my timeline tool is, or time cursor is. So this candle here, this candle, this candle, this candle, this candle, all these red candles, these strong bearish rejection candles, were once strongly green when they were at the top of their peaks. Okay? But you can see as a whole, this general area held. We didn't get any real closes above these trend lines. And it wasn't until this candle here that we get one close above this trend line here. Okay? Then it was quick little spike up and then close back up a little before a strong decisive candle which remained above both these lines for some time. Now we're coming back down in that general area on the flip side, okay, from the back side. And this could be a potential area of retest. So I want you to remember how these candles were once strongly green. This candle is strongly bearish at the moment. With that being said, it wouldn't surprise me if this whole idea is legitimate. It wouldn't surprise me to see this candle turn out to be something similar like this, where you get that strong initial push down, that strong initial push up, like it happened up here, but then reverse and push up. Okay? Those buyers stepping in like the sellers stepped in on this side of it. So keep that in mind. Now, let's start building some Fibonacci confluence. Okay? If we are just looking at this huge move up, our last push up into our new high from our higher low, and we're just locking on that sore thumb low to sore thumb high, we're sitting on the 78.6 fib retracement right now of this huge move. Okay? This huge move here. Now if you bring out your time and data tool, that's going to be 1,000 day from low to high. 1,000 days, essentially, roughly. Okay, depending on which candle you're locked on. That's a very long time. Okay, it's like 5,000 pips from low to high. Huge move. Okay. and we're since sitting on that 78.6 fib retracement. Now, once we have this huge move down, what are we looking for? Well, we see this pop down. That's a pretty established wick there, strong wick. And then push up, okay? Breaking these little trend line things here that we have. Okay, so if we take that sore thumb low to sore thumb high, we're literally sitting on the 78.6 fib retracement of that move, okay? So we have a trend line, several trend lines, 3 trend lines so far, 2 major Fibonacci levels, or potentially major Fibonacci levels, and this huge zone here that we're smack dab in the middle of as of right now. You're starting to see how we build the confluence for our trades. Now, with that being said, it may just blow right through this. All this confluence may be essentially bullshit, okay? With lack of a better word, this stuff may not hold up, okay? It looks good. I'm building a good case for myself, you know, but at the end of the day, if price wants to go down, it's going to go down, okay? So you have to just keep that in mind. Let's start dropping down some time frames because we're on the monthly chart. Let's drop down to the daily time frame and look at some more, you know, price action as it has unfolded over the past couple months and not necessarily 15 years. Okay? So as of right now, what's happened? Okay? We double topped, clearly double topped up around a 0.81. Okay? We have that neckline of that double top that was right here. Alright? So, huge bearish move. That's just been sustained. Each pullback up into its potential lower high area has been quickly sold and pushed it down into new lows. Last week was no exception. The past couple weeks, we ranged heavily here for, you know, a couple months, a few months. Finally broke, retested that, and has since pushed back down even lower to our most recent lows, which is essentially we're at the lows now. Okay? But with all that, we're at all this confluence. Okay? So try and lock onto this a little bit better here. That's what happens when you go out to the higher time frames. Those things don't snap quite right. And excuse the silence, I'm just kind of trying to fix all this stuff up. So, okay. So based off this little trend line here, we're essentially sitting on top of it. Okay. More recently, daily chart. What's been going on? You can see the bounces off these trend lines here. Sorry, magnet tool's back on. Okay, you see that? You see the trend line on the top, the trend line on the flip side. Okay, and you can see, you know, as you zoomed in, you can see a little bit better how precise some of these tests were on these trend lines. Okay, respected it pretty well for the most part. Alright, now most recently we are just in a crazy channel. Okay, if you just kind of sloppily put that in there, you can see we're just in a crazy channel, using this as like a initiation point. You can kind of make a case for slicing through these and using this as your establishment point. Doesn't matter. I mean, it's all right in and around here. It's all lining up pretty nicely. Okay, channel top, you can see once it was established, perfect tests on the top side. Okay, let's start building some Fibonacci context on the lower time frames here. Lower time frames meaning daily chart. So remember this neckline area here. I like to pay attention to major areas in the market that really break down, or where those initiations really kind of start breaking structure. And for me, this little area here, this last little push up to test this trend line for the third time, this is an area that just really stands out to me because, one, it was kind of a last little ditch effort for the bulls to kind of, save face coming out of this these retracement levels coming off this double top here. But also it initiated the impulsive move that really broke this neckline. I mean, yeah, it broke and kind of chopped around it for a couple weeks, and then finally traded back up above it, which then initiated another established move down that essentially confirmed that breakout. But this was the initiation point there. So I like to pay attention to those areas of high volume. Where are those last ditch efforts for the bulls at? And in my eyes, this was one of them. Using a little advanced fib technique I use, we have a nice low to low point here. Using this low here down to this low here. There's a nice 50% retracement. Now let me delete these higher time frames. We already know we're sitting essentially on top of those 78.6 fib retracements. Okay? So let me delete that. You can see this a little bit better there. The 50% retracement. Okay? Push right down to that profit target here. Little quick retracement, and then we're sitting on top of that low to low profit target right now. Second profit target. Okay, so very interesting areas down and around here. Now, let's build some more Fibonacci stuff. Okay, if we are looking at this last move, which broke out of this range structure here, if you want to kind of box this range off, kind of change this color a little bit, we turn it red. Okay, got a range structure here breaking out. That initiation really kind of stepped in here. Alright, and if we look at this as a potential ABCD pattern down into these structured, these areas, these levels down here, we can see that ABCD pattern essentially completes where we're at right now. Okay, it looks like we're front running it just a hair. As of right now, we may still continue to push down a little bit, but we're there essentially. Okay, the way I define an ABCD pattern is, you have your A to B, B to C, C to D, and I view that some people use like a measured move, but again, that's very subjective because it's determined on, let me see how to clone this. It's determined on where your if you're doing from wicks, if you're doing from bodies, if you're, I like to just use Fibonacci and extend that completion point into the price future by using kind of a fib extension, if you want to call it, or an inverse fib of the B to C leg. And when I do that, I have the 161.8 fib retracement, this one here, as my completion point. And again, it's a zone. Alright, so sometimes what I'll do is I'll do that measured move, clone that, kind of find that next point there. So I'm saying my ABCD pattern is essentially completing between that measured move and that 161.8 fib extension or inversion, whatever you want to call it. Okay, So for my ABCD pattern, that's what I'm looking at right there. Okay, extra confluence in there. And then I just delete the fibs because I know that's kind of my zone there. So can you see how we're starting to build our case for entry in and around this area that price is at currently? That's the way I do my trades. That's how I plan my trades. Every day, every week, I sit down, I build those cases for entry. You know, taking it down even to the 4-hour chart. Top-down analysis. Find something else. Build your case. Start looking at these lows and seeing where those are lining up. You can see we are squeezing on the lower time frames right down into these levels. Okay, if we're using these just lower points here, these lower wicks, we're on those right now. Okay, in and around these areas. So find some other confluence. Haven't quite tested that area yet, but this is how I do it every time. Okay, I just build a case for entry. We're coming up on 30 minutes now on this video, my longest video to date, but I just wanted to do this analysis for you guys because like I said, I've been getting a lot of questions. How do you find your best trades? How do you find those huge trades? Well, this is what I do. I leverage the higher time frames. I leverage those higher time frame structure levels, Fibonacci levels, trend lines. Those are areas that you can find very explosive moves from. Okay? And putting all this stuff together in and around this area, this is a high probability trade for me for a long position. Whether it's going to be a quick pop or a complete reversal, and you just kind of break up and start its new, uptrend, I have no idea. I cannot say with certainty what's going to happen to this market. All I can do is build myself a case for entry. And that's all I've done here, folks. That's all I've done. Okay? So I hope this has helped. I hope you've been able to hear me because I'm looking down at my recording thing right here, and looks like the microphone might be off or the volume's off. So I don't know if that's my fault or what, but so okay, now profits. How do you gauge your profit targets and all that stuff? Well, it's really highly dependent on future price movements. Now, if we start bouncing out of these levels, I'm going to leverage those moves and find those profit target extensions coming out of these levels. And obviously, keeping in mind the higher time frames, what the higher time frames are doing, I want to keep that in mind. Again, on the monthly chart, this legitimately could be our higher low. Okay, whether it is or it isn't, I have no idea. Try and tighten this up. See, every time you flip time frames, it gets a little flubbed up. Okay, so I don't know if this is a higher low or just an impulsive move. We get an impulsive move, a correction, and then the next impulsive move that's going to tank this sucker. Okay, who knows? I don't. If I did, probably wouldn't be making this video right now, to be honest. I'd be on a beach somewhere instead of northern Nebraska. God's honest truth. I'm sorry. But this is real life. We don't all have crystal balls. So this is just something that we have to keep in mind. Okay? Build yourself an edge. That's all we're doing here. I don't want to get too long-winded. I'm already at 30 minutes on this. But if you don't learn anything else from me or from this video, it's to zone up. I probably tell 10 people a week, zone up. They message me, they say, hey, I had these levels, they didn't fill quite, I missed my trade by like 5 pips. What do? My answer is always zone up. Okay? Again, remember that trampoline scenario, that analogy I talked about. Support and resistance, no matter what it is. Trendline, fibs. Yes, fibs can be support and resistance. Okay? So actual horizontal support and resistance. You know, trend lines, I said trend lines, any kind of channel structure, anything like that can be classified as support and resistance. And I classify support and resistance as not something that should be viewed as exact. Okay? It's gonna wiggle. Okay? You're not gonna get those perfect entries all the time. Zone up, find that confluence, and then wait for some type of confirmation in and around that area, if you're a confirmation trader, or just enter with regular, with managed risk. Okay? Over time, if you're an aggressive trader like me and you just go ahead and enter when your levels fill, then you'll get a feel over time for the type of stop loss that you need. Now, my stop loss isn't the same every time. I know some traders who just use a flat 20 pip stop loss, and they're comfortable using that. Me personally, I'm not. I found that I was much more emotionally sound or mentally equipped to handle a larger stop loss and a smaller position size than just using the same stop loss, same position size every time. So that's the way I've done it. But that's something that you have to find out for yourself. You have to plan for yourself. You have to develop for yourself, and that's essentially all I have to say about that. Now, for this particular trade, if and when, my exact levels fill, then you have to keep in mind this is a potential swing trade. Okay? So if you're looking on a daily chart and you're expecting this general area to hold, sorry, that trend line got messed up again. Just gonna delete it. If you're expecting that general area to hold, you don't need this huge 200 pip stop loss. Okay? I am literally expecting this general area here to hold. Okay? We're already down here, so anywhere from like here to here, I'm expecting to hold. Okay? If price gets all the way down here and double bottoms, or I should rephrase that. If price penetrates this deep, this is where all my confluence is, essentially in and around here. From all the lower time frame analysis up into, the majority of the higher time frame analysis. This area here is where all my confluence really kind of sits, in between this 100 pip range here, more or less. Okay? From where price currently is down to maybe, 70 cents. Okay? So that's essentially 100 pips right now. Now, if you are some type of confirmation trader, you may wait for, I don't know, maybe a double bottom down here or something, or a lower time frame trend line break. If you're on an hourly chart, this is essentially our main our main little trend line as of right now. Well, I guess technically a really lower time frame, or really immediate, this would be it, something like that. So if this breaks and then maybe breaks this trend line, gets back up above here, that's only 45 pips away. If we start breaking this trend line, that might be your confirmation to enter. I don't know what your trading style is. I don't typically wait for any type of confirmation. I just kind of enter. Like I said, I'm expecting this to hold. If it doesn't hold, I'll bounce. Okay? I'm not going to sit in this sucker and start praying. Okay? That's stupid. Your ego is not your amigo, my friends. Okay? Bounce out of that freaking position before you blow your account. Alright? I've blown too many accounts. I'm being honest, okay? Doing that crap. Wishful thinking. Finish that crap up. Get through it. Whatever you need to do, get over it. Alright? This ain't freaking Vegas. You're not going to win the lottery with this thing. One trade won't make me. One trade won't break me. That's the mentality you should have in this game. Okay? This trade doesn't work out. Pff, so what? So what? Some will, some won't. Next. Alright? I hope you've had fun listening to me for 35 minutes. You know, if you like this, let me know. If you want me to do more in-depth analysis like this, let me know. Maybe I'll start doing a weekly one or something. So again, follow me on Instagram. I'll post the link in the description, and you can go check me out over there. You know, I'm just an everyday dude. You know, this is my office. This is my bookshelf. I got stuff back here that I collect, whatever. You know, I got junks laying around me here. This is my office, okay? You know, this is my life. So if you go follow me on Instagram, you see my life. You know, I do everything from, you know, playing with frogs and with my daughters to fishing to, you know, barbecuing to posting trades to, you know, posting post-workout shakes, whatever. That's my life. That's who I am. That's what I do. Okay? This is what I do. I'm just a normal dude living it up in small town Nebraska. So, cheers, my friends. I hope this helped. Let me know. Like, subscribe, share with your peeps, share with your friends, whatever. I appreciate your help. I really do. And your feedback, your criticism, constructively, or, you know, destructively. If you want to try and knock me down, that's cool too. Whatever. You know, that's your thing. But I hope that you've found value in this. I know this was a lot to take in, and you know, if you're not familiar with this types of trading methods, then it may be a little overwhelming. Rewatch it, but let me know sometime. Drop me a comment, drop me a like, send me a message on Instagram, or I think you can send messages through YouTube. I don't know. I should probably check to see if I have any. But all right. Take care, my friends.